Okay, this is the blog for Tuesday, the 31st of July. So, day 37 of 65 of the compound effect. Making forward progress every day, applying my edge and my method. The more I think about this sort of thing, just applying some sort of system. We've got systems for everything, and reading through a few books at the moment. The actual, when you think about trading and making trading profitable, I'm thinking of this one particular line. This guy says, there's many parts to trading. When you physically think about the system, just the system itself, there's many parts. But when you think about a trading business, there's even more parts, meaning the psychology and all those sort of things that come with it. And this little wrap up or this blog or specifically trade entries is such a minor part. In fact, this particular guy says that there's 10 parts to physically actually trading, and the entry is one of the smallest and most insignificant of all those parts. Which is quite bizarre, because when we look at trading, so much is just focused on the system and the actual entry. So doing something like this and just getting it really clear in the mind is exactly what you need to do day in, day out. Be doing the same thing and moving ahead at day 65, like the goal suggests. Is something like this is going to have way more impact than, say, sitting there and just trying to create a system. System development is fine, but if you just day in, day out just focusing on getting a better and better trade, for example, overcompensating the market and just really trying to get the perfect setup, or then you're going to get very frustrated and really start to struggle to move ahead. So I think a compound effect challenge like this for me works really well. So here's the trading method. Again, just in the process of just trying to make it even clearer. I know within the day sometimes I'm very clear on where I'm looking at, but sometimes I think if what I want to gauge this on as to how clear it is whether I could give this system to someone else and say, here, you trade it, and they'd be able to get the same results. Now, when I truly think about that and break it down, it's getting there, but it needs some more work, and I just don't want it being too complicated. And what I've heard is, with a trading system, for each setup you have, you don't want more than 4 or 5 degrees, which means for every degree is sort of an element. So if you think of every indicator, or every if you look at the other markets, or any sort of support and resistance, anything you look at specifically, that's a degree or a part of your system. So if you've got anything more than 4 or 5 parts to look at, then it's getting too complex. So really taking that on board, and of course keeping the foundations, keeping the core there, but always just making it look to make it more simple as possible. Then you can just really focus on what I need to focus on, and that's just implementing it with absolute precision and creating a really strong risk model around the outside of that. So here we go, daily chart here. So I'm starting to use these daily charts less and less. Yes, they're significant as far as the overall trend goes, but just the 15-minute chart or sort of a medium-term chart gives a lot more idea of what's happening. So this area here, obviously we're pushing higher. We're getting to an area we haven't been for a few months, but then they're coming back like this, and that's all the picture really tells. Then you bring over a 15-minute chart. 15-minute chart, and I'm a lot clearer exactly how I'm approaching the day. So here's for Tuesday here. So there's this really significant support line through here, that once we start getting underneath that and applying some pressure, there's a trade right at the end of the day that used this area really well, which I'll get to in a second. But just really clear on exactly what's happening. When we started pushing up, and the market's stalling, it's coming down so strongly like it was, and knowing that this level's here, which you can't see on the daily chart, then that gives a lot more perspective as to what's happening. Always keeping this on board as far as giving a direction and trends, and using it to give a guide of where we're going. At the moment I can see now I need to add something in here, that there's quite a significant little trend line there, and look to see how that plays out through the pre-market. These trend lines are quite amazing. Once we all of a sudden get above it or below it, however you want to use it, this vertical form of vertical form of support and resistance works really well. But again, that's a personal opinion, and what I come to the conclusion is that with everything that we talk about, it's always just one person's opinion, and whatever you do, it's got to be personalized to the individual. One thing does not necessarily work for another. So I think keeping things simple and without any sort of, not trying to make it too complex, and just really focusing on what matters. That's risk models and mindset and all those sort of things, and making it sure it lines up with the core of you. That's why I something like this blog. Now that I'm aware that I try to keep it exactly the same as how I normally do it, but I'm now aware that a few other people are listening to it. But whatever I say, keep it in relation to yourself and what works for you. Just what I'm doing every day doesn't necessarily suit anyone else, but there's certainly I try to talk about for myself and for others things that matter as far as an overall perspective, and that helps. Not specifically the trading entries, even though obviously the blog is a lot about that, and I do this every day just to confirm. The biggest reason I do this is to confirm and get it really clear in my head exactly what I want to do. I just want to be as systematic as possible, and that's where success lies. And then of course wrapping the risk model around the outside of that, but throw in a few things like bits of psychology and what other true professionals and the way they approach it. That's also important. So here we go. In regards to the risk model, I got this first trade here, which comes up. It's hard to see, but I used the 1 minute chart to get specific entries based on price action, and really utilizing this top-down approach where looking for key levels in the market from 15-minute charts, 60-minute charts, then looking for my setups on the 5-minute chart, and then using specific entry points on the 1 minute chart, because I need to refer to the very short-term charts to get the exact entry. Obviously with a 5-tick stop out, we need to line that up pretty well with support, resistance, or solid areas in the market where it should hold and go in your direction. So of course we need to use the 1 minute chart for that. But with this particular first trade here, I call this the directional breakout trade. So I'm taking the idea of a risk model and utilizing that a bit here. So what I'm using is the exact same setup and just making it as clear as possible. And this is probably the one setup that for myself I feel there's a bit too much discretion. So I'm looking at adding a few things just to make it very systematic. But what I want to do is take that setup, and as risk model suggests, is any sort of robust system or robust signal, meaning it's quite a solid systematic setup. You can take that and tweak it to have it a way you like. Increase or decrease strike rates, increase or decrease expectancy, and change it in a whole heap of different ways. Take the exact same setups, but create a whole different variety as far as what you're going to physically extract from that trade. So this particular one, maybe it's going to be a little bit different to the other trades. This is going to be one where I'm going to really look for, say, 4-5R, meaning whatever I risk, looking for 4 to 5 times the profit. So knowing that the strike rate might decrease a little bit, but the expectancy of the trade, the average winner, is going to be a lot higher, because this first trend of the day is quite often the one that just tends to go, and especially in tighter markets. I know when we get quieter markets, if you get the direction right straight up, quite often the day might only go 10 points, but just goes all in one direction, or comes back, but then eventually just keeps going in that same direction. There's opportunity to take a whole heap of points out of it. So I want to treat it more as like a trend following signal as far as that's concerned, and approach it that way. So keeping the same signal, but just the risk model around it, just establishing a bit of a change as far as that's concerned. So what I'm looking for here, and I've kind of drawn it, is identify a range in the pre-market. So you can see there's a box around this sort of this sideways range that we've formed here. Okay, now we started popping down out of that range to start off with here. So, but what I'm interested in is this core on a sideways range, and you'll see this within the market. And what I want to see is either the market push outside of that range, or push above it or below it, and all the other markets going with it, and sort of get some clarification that's heading away from that. Then quite often what it does is it comes back, touches the top of that range, or the bottom of that range in this case, and then goes. So in this case, if I'm looking short, want to go away, touch the bottom, so use the bottom of that range as resistance to push lower. If we were pushing up, push through it, use the bottom, top of that range as support, and then continue. Okay, so obviously we've popped down, popped back up, so if we're looking at it straight up, very early on it would have been this particular entry here, but that's a bit too early as far as I'm concerned, because I really want to gauge what the cash market does when it opens and what other markets are doing. But what happened is then the market did start to push away, and what I'll do is flip to the 1 minute chart here. So this is the line here, if I just quickly draw that in so it can be seen. So here it is. Oh, wrong button. Okay, here it is. Here, I'll just draw a rough line in there. So that's basically the bottom of that box. So we popped up here, popped down. So this is when we start pushing down. All the market starts breaking down here, and this is where they really started to go. So this is where I was interested in putting my order on. So when it basically moves 4 or 5 ticks away, that's when it confirms it. Then you can see this green candle hit popped up here. This is where I was looking. The order was on right then, looking for it to get it. Just came within a few ticks and didn't get a fill, and then it's pushed away. By the time it pushes right away like this, I actually get rid of the order, because if it starts coming back, really what I'm looking for is that they come back quite early on and then get it. So when it starts coming back like this, it's quite an aggressive move back to the upside like this. I mean, this one still would have worked, but I really want to work on understanding the best way to approach the bottom of this. But anyway, for now, I'm just looking at getting on it as early as possible, and not just letting it hang around like it did. And when it comes back like this, just being careful as to how quickly it comes back. So anyway, I didn't leave the order on there, but this is the one I'm looking for then to really hold and just continue on a direction. What normally happens, what we've seen today, where this market just bounced between power points like this right up until almost 11:30 really. That's quite rare. That you wouldn't see that happen more than once a week, or not even once a week. Most of the time it picks a trend like this when it comes down like this, and say I was in the trade, it might pop up around this area here, but somewhere hold and just keep on going down. I'm looking to take 6-7 plus points out of it. That's where I'm looking for the big R multiples. So even in this particular case here, where it's gone sideways, technically the trade still work. It wasn't to my entry. But I don't really want to focus on that. But today was probably not a best example. Today is an example of maybe where you expect to be stopped out because it went sideways. But what you want to take advantage of those days where the trend really goes. And like risk models suggest, you want a solid, robust, systematic signal, and then just keep on taking it. And it really doesn't matter if it fails more times than it wins. What matters is the entire risk model around it. Anyway, I'll leave it at that. I've gone on quite a bit about that, but it's certainly an area that I just find it interesting. All this talk about risk model, just want to take this same signal and create a different model around the outside of it, and that seems to be what's working for me at the moment. Alrighty, so from there, this market's gone quite sideways. You can see there's 3 key levels that I've marked as far as these levels were predetermined, and the market's reacted quite well to all of them, so that really clarifies the level. And these levels can be adjusted too. So once we get into the market, you might find the market's dealing a tick or two away from that key level, so that level can be adjusted. So they're not like they're there and set in concrete. There is times when I'll move it a tick or two. It's nothing more than a point, because if you move it more than a point, it becomes a different area. So overall, there was 6 setups today. You can see 3 I've taken, and then 3 arrows, 1, 2, and this third one over here that were setups, but no entry, or for whatever reason there was no setup. So the first one here I've talked about directional breakout. No fill just there. This one here I'm looking for a momentum trade. So this is like my 5-minute fade trade. So what I'm looking at is there's this key area here. I'm on the 1-minute chart here, so looking for the market to push through 8 ticks or more for me, then come back, get support off it, and go. So what happens is, and I was looking at here at this candle here, so it's just missed it by a couple of ticks. Once it's gone that 8 ticks, looking for it to get on there and then push up higher. Once it goes 8 ticks past that determined area, like it should be at least at break even, I then cancel the order and I don't put it on again when it comes back. So you can see again, this one's come back a bit like that directional one, and eventually it would have worked, but I'm not looking at that. I'm looking for the first time my signal is triggered, and then if it goes without me, I'm taking the order off and I move on to a new area. So that particular setup just missed out there. From there we've pushed up higher. Not really looking at anything around here. Then we started pulling back here. Now looking for a breakout trade. So what happens whenever I look for some sort of, for example, I'm looking at buy signal, so a breakout trade, or it might be a momentum trade to the upside, a continuation to the upside. With any of those trades, if they form a significant pivot area in the market, which is this point here, and I'll show you in the 1-minute chart, and then it starts approaching that pivot and all the other markets breaking through that pivot, I'll look to reverse the trade. Basically take on the reverse in action, because a lot of the time when you get those reversals and they break those areas, they're the areas that go really quickly. It's a bit like a directional trade, a 5-minute directional trade. It's just basically picking the new trend up really early. So here it is here. This is where there was a key level here as well, so looking for this level to hold. It popped up. As soon as it So it's around here I'm starting to look at a 5-minute breakout trade, knowing that if this, but in the meantime, looking at this pivot going, if this fails, this pivot, and it breaks underneath it, I'm going to sell it. So once it broke down underneath that pivot there, sold it. So it popped down, popped up, and then it went a couple 10 ticks from there. So reversal strategy around there, push down lower. From there, this market's really motored to the downside. You can see then it's picked up this support level, and that's where it started hanging around. So potentially looking at a breakout trade here on the downside again, but never actually set up for myself. And what needed to happen is, because there was this support line here, it actually needed to get underneath that before it take any sort of signal. So it was going to be very hard to get a breakout signal there. And so that obviously never eventuated with the support line there. Within this region here, again, reversal trade popped up here. So there was two spots to take it. Let me flip over to the 1-minute chart. There was either using this pivot here or this pivot here. So the first one that I identified and was here once it started breaking up through this point here, and it would have just been stopped out. But what happened here, not looking to go here, knowing that once it gets up to basically this level here, there's a key level in the market there. So I'm not going to take a trade where it's going to run straight into my key level and potentially bounce down off it. So that's pretty much almost to the tick what's happened. It's got some resistance off that, but then once it forms that pivot right at that key level, if it comes back at it again, very interested in that. And this time when it broke this pivot here, because this is where I'm looking for a potential sell setup, it fails, looking for the reversal, and once it starts breaking, going higher, getting on board that. So this one actually went 8 ticks. I entered in here. It went 8 ticks, came back and stopped me out for break even that particular trade. From there, momentum trade here. So this is the one we were looking at the room as well. I don't know if those were in the room. There was actually a trade we were looking at for the trigger around this particular area. But as far as the way we take in the room, the physical crossing over the predictive average, that never came. But for me, always take it off support. So again, where is it? So that's here. Okay, so once we pushed up, here's the support level for me. We've got 8 ticks past the area. Once it comes back, test support, and you can see also the price action dealing around that support line as well. I'll take it there. So I went 8 ticks exactly, and again, a break-even trade. I've never had so many break-even trades in a week. 4 break-evens this week, 1 winner, 1 loser, so it's quite interesting. But anyway, break-even trade as well. Then it started getting back underneath. Then what's happened, again, it's momentum's to the downside. It's popped up and uses this area as resistance, and this is a momentum trade again, but in the opposite direction. Again, if you look at this like a 5-minute fade, it's almost triggered. Momentum on the downside, the predictive average is crossing back up, so looking to catch the pullback and sell. So that exact same approach, but using key levels or significant support resistance areas in the market. Now, to be honest, I don't know what I was doing at the end of the day. I think I must have been wrapping up, but I didn't actually see this one coming. So I haven't recorded it. Even for my spreadsheet trades I don't take, I do record it for the spreadsheet, so I can get a very consistent results as far as that. But this one here, I'm not sure whether it would have been filled or not, and I didn't actually have the order on there. So I'm not sure why I missed that, what I was doing at the time, but it was, as far as my setup goes, it was a very clear setup. And this particular one, as it's coming down, I guess it's hard to hold it through this support level here, but spoke in the trade room a lot about how if you're looking for some bigger trades, opportunity on the downside was down to 1372, because once we start breaking this level through here, which is a key support level in 15-minute charts, it was definitely going to get a roll along to the next support level, which is around 1372. But regardless of the fact, not sure what would happen there. I'll put it down as a no fill. So just to finish off, I've been speaking a little bit about risk models. Again, just did the figures on this particular one. At the moment, I'm just taking, looking for always risking 5 ticks maximum, reducing my stops wherever possible, get out, break even once it goes 8 ticks, and then looking for a 10 tick profit. That's the way I've always traded it. Really just taking all the information on board as far as every single trade, whether it's win or lose or break even, recording where it could have got to, where it didn't go to, just taking as much information as possible so I can take these exact same setups, but really play around with the money management and the risk model and create something based on maths that's going to work as best as possible for me, and really looking at extracting the most profit possible out of the same setup. So a good way to look at it is, I look at it as three ways. I could take in the system as is, or I could look at taking, which I currently do, I can look at taking a third of my contracts out at 1R, meaning if I risk 5 ticks, as soon as the trade goes 5 ticks in my favour, looking at taking some sort of profit out then. And it's certainly something I'm going to start switching to soon, because the evidence is starting to really mount up. That's for me personally, I need to start doing something like that. But I've got a situation where I could take out a third of my contracts at 1R, or even half of my contracts at 1R. So based on, like I said yesterday, there was a difference of 5 ticks within the exact same setups, but just the way I manage the trades, there's a 5 tick difference within one day, and it's exactly the case today. Although there wasn't a massive difference, there was certainly a variance in the way I could approach it. If I had it taken as is, which I did, it was a 12-tick profitable day, so up 12 ticks for the day. If I had taken a third of my contracts out at 1R, would have been an average of 13 ticks for the day, so it actually would have been better off. And then if I had taken half the contracts out at 1R, would have made an average of 13.5 ticks. But this week is when there's a lot of break-even trades. Obviously, the bit where you're taking out some of your profit out at 1R is going to work in your favour. It's those weeks where you have a lot of winners, where obviously then it's going to work in reverse, because you're taking out profit at smaller amounts, so you got less contracts going to full profit. So obviously it works both ways. So that's when you want to look at this sort of scenario over many weeks and really get a good gauge of what works best. So obviously that's what I'm doing. But from the information I'm getting from a risk model, there's certainly something there to, as far as taking something out at 1R, and I know that Trading the Zone talks a lot about that as well. But anyway, guys, that's I'll leave it there for Tuesday. I've rabbled on for about 20 minutes, probably one of my longest blogs. But lots of interesting stuff, I think, and it's amazing what you can do with trading. You can really be as creative as you want, and once you wrap your mind around the fact that it's not all, like I said, it's not all about systems. A good system is important. I think what's most important is you have a system that you have a lot of clarity with, and that you have confidence in, and that you can see it, with black and white clarity, that exactly what you need to do. And that's something I work on, as opposed to the actual signal. Any signal's going to work. Any signal's going to work, and then you wrap your risk model around that, and that's what excites me. And it's obviously stuff I do a lot of work on, and speaking with a few people at the moment about risk models. It's, for me, that really clarifies a few things as well. I learn from speaking about that as well, which is hopefully a win-win situation for everyone. Anyway, guys, speak to you Thursday.